Welcome back to my channel, Dinar and Dong Updates, your trusted source for all things related to the Iraqi dinar and the Vietnamese dong. In today's episode, we take a deep dive into the rapidly shifting economic and monetary developments in both Iraq and Vietnam, highlighting crucial changes, expert opinions, and what might lie ahead. Vietnam's steady growth and currency standing. Let's begin with Vietnam, a nation that has grown into an impressive economic player in Southeast Asia. With an exchange rate currently hovering around 25,575 dong to $1, the Vietnamese dong remains tightly controlled by the country's central bank. Despite its relatively low value in comparison to the US dollar, the Vietnamese currency maintains a stable position, and Vietnam continues to be listed on global forex platforms. The country's economic growth has been consistently strong, thanks to booming exports, expanding manufacturing sectors, and steady foreign investment. Despite global financial turbulence, Vietnam has weathered economic challenges better than many of its peers in the region. This performance has drawn attention from international observers who have speculated on whether Vietnam might consider a currency revaluation. However, as of now, there are no confirmed plans by the Vietnamese government to adjust or revalue the dong. The State Bank of Vietnam has emphasized stability and gradual reform, preferring to maintain tight control over the currency's value. Many economists agree that, while the currency could theoretically support a higher valuation in the long term, such a move would not align with Vietnam's export-driven strategy, which benefits from a weaker currency. Iraq's evolving financial landscape. Turning now to Iraq, the financial scene is undergoing a dramatic transformation. The country is actively reshaping its economic infrastructure, guided by ambitious reform strategies and growing international interest. Recent reports highlight a significant uptick in diplomatic and business engagements, with delegations from countries like Germany, France, and Italy visiting Iraq to explore partnerships and sign cooperation agreements. These visits are tied to Iraq's push toward a digitized financial future. The Iraqi government, alongside officials such as Mr. Sami and platforms like Azra, are leading the effort to educate both citizens and investors about the features and objectives of Iraq's emerging digital economy. This campaign is designed to build public trust and ensure that stakeholders are fully informed as new systems are rolled out. A key element of Iraq's modernization strategy is the crackdown on black market currency exchanges. Over the past few years, the Central Bank of Iraq, CBI, has launched numerous initiatives aimed at curbing informal financial activity. One of the most significant milestones is set to occur by June 2025, when the last 5% of imported cash transactions, currently routed through informal channels, will be redirected through licensed correspondent banks. This follows an earlier reform in December, when 95% of these transactions were officially transitioned. This move is expected to virtually eliminate Iraq's parallel market, bringing nearly all currency dealings under regulatory oversight. The CBI sees this as a major victory in its long-term mission to bring transparency, security, and stability to Iraq's financial ecosystem. Concerns over physical dinar holdings. A lingering question for many Iraqis is whether they should exchange their physical dinars. At present, physical notes exchanged within Iraq are subject to the program rate of 1,310 dinars per US dollar. This official rate is far lower than speculative or black market rates, which disincentivizes holders from converting their cash, especially with stringent border controls making it difficult to move large sums in or out of the country. This situation has created a dilemma. Many people hold on to their dinars in the hope of future revaluation or redenomination, while officials stress the importance of compliance with the existing rate structure. Toward financial globalization, Visa, MasterCard, and more. In a landmark announcement, Central Bank Governor Ali Mohsen Al-Alak revealed that Iraq is on track to fully integrate Visa and MasterCard systems before June 1, 2025. This integration is being executed in collaboration with the U.S. Treasury, the Federal Reserve, and an international auditing body. Once implemented, these changes will enable smoother and more secure international transactions for both Iraqi citizens and foreign investors. This leap toward global payment compatibility is seen as essential to Iraq's broader financial reform, particularly as it seeks to establish its own presence in international markets without relying so heavily on the U.S. dollar. Redenomination and revaluation. Still just talk. The idea of redenominating the dinar, removing 3 zeros from the currency, has been floated for years. If enacted, a 25,000 dinar note would become 25 dinars, and a 10,000 note would shrink to 10. While such a change could streamline accounting and improve public confidence in the currency, officials have been cautious, avoiding firm timelines or concrete commitments. Still, many analysts believe the infrastructure required for a redenomination or even a revaluation is already in place. Iraq has taken huge steps to clean up political corruption, modernize its banking systems, and implement reforms that promote fiscal responsibility. Nevertheless, external confidence in the dinar remains limited. The discrepancy between internal readiness and external skepticism is becoming increasingly pronounced. Many observers feel that political delays, particularly hesitations from Prime Minister Mohammed Shia al-Sudani, could undermine the momentum built by financial institutions. Digital dinar and technological overhaul. As part of its digital transformation, Iraq is moving toward the introduction of a digital dinar. Companies like K2 and Wyman are heavily involved in this effort, helping to upgrade banking infrastructure and train staff in preparation for a digital currency rollout. Interestingly, Wyman also chairs the advisory board for Iraq's Development Road project, reflecting a broader, long-term investment in Iraq's modernization. This move to digitization aligns Iraq with a global trend toward digital currencies, enabling more efficient transactions, reduced corruption, and better economic tracking. But it also signals something more ambitious, a step toward greater financial independence and global integration. There is also talk among some circles that the future dinar may be backed by tangible assets such as gold, silver, oil, and rare earth elements. If this occurs, Iraq's currency could become one of the most asset-backed monetary systems globally, dramatically increasing its credibility and attractiveness on the world stage. Moving away from the dollar. Another major development is Iraq's gradual detachment from the U.S. dollar. Sources indicate that the United States has either curtailed or ceased the flow of dollars into Iraq, compelling the country to conduct more of its trade and financial transactions in dinars. This pivot has been both a challenge and an opportunity, pushing Iraq to build a more self-reliant financial system. This shift underscores the urgency of integrating tools like Visa and MasterCard, which will allow Iraq to conduct global transactions in dinars and reflect the true value of its currency. Once these systems are in place, they could facilitate more accurate price discovery for the dinar, leading to a more realistic and potentially stronger exchange rate. Investor confidence and public awareness. CBI Deputy Governor Dr. Ammar Hamad recently pointed out that Iraq's vast financial reserves are a critical factor in the gradual appreciation of the dinar. He emphasized that prudent monetary policies, coupled with improving diplomatic relations, especially between the U.S. and Iran, are contributing to reduced market volatility and increased investor confidence. Inside Iraq, the general public is increasingly engaged in financial discussions. What was once considered complex and obscure, topics like exchange rates, banking reforms, and digital currency, is now part of everyday conversation among Iraqis. This cultural shift reflects a nation that is not just undergoing reform, but actively participating in it. What lies ahead? The big question on everyone's mind remains, will Iraq actually revalue or redenominate its currency? And if so, when? While there is no definitive answer yet, what's clear is that Iraq is laying the foundation for transformative change. Every policy move, partnership, and technical upgrade seems aimed at one overarching goal: full integration into the global financial system, backed by a strong and credible national currency. Political timing remains a wild card. The government must weigh internal pressures, regional diplomacy, and global market conditions carefully. But the infrastructure is almost ready, and the will, though sometimes inconsistent, is building. Conclusion. Standing at the crossroads. In conclusion, both Vietnam and Iraq find themselves at pivotal moments in their financial evolution. Vietnam, despite a robust economy, continues to prioritize currency stability and export competitiveness over speculative revaluation. On the other hand, Iraq is in the midst of a full-scale economic overhaul, pursuing digitization, regulatory reform, and a gradual move away from the US dollar. While we cannot predict with certainty when or if the Iraqi dinar will be revalued or redenominated, all signs point toward a country gearing up for something significant. With massive reserves, stronger regulations, international partnerships, and a motivated CI,